Joining us now is Todd Gordon of Ascent Wealth Partners to talk about not only what happened, but Todd, more importantly, where is, if anywhere, that support that may put that floor under this?
Yeah. So it's a very interesting conversation. I think we just have to realize that this is a market now. We're not in modern portfolio theory. This is behavioral finance. And I think there's a lot of psychology that can be sort of interpreted based on these squiggles that you're seeing in the chart. Keep in mind, we were sideways for 2 years. The market sentiment 2 years ago by some of the largest hedge fund managers was bearish, was underinvested, and was outright short. We've just recently broken higher. So I think there's this general disdain right now for this market. And this is the first opportunity post 2-year consolidation that we've seen any kind of selling. So I kind of think that sentiment is carrying over. All right, back to the charts as we clear this out. Look, this drop right now at the close was about 12.3% from the high. Putting it in perspective, calming ourselves down, looking at where we've been, where we are, this is very much on pace to be equal to many of the declines that we've seen over those last 2 years. When you start getting above a 16% decline, that becomes problematic. But again, this is in the context of a major range from which we just broke out, and we're recapturing some of the breakout. There's a lot of hope at the 200-day moving average today. I was watching the bounce, and that's when we went down only 200. We gave that up. Okay, getting off of the daily, this is the weekly chart. And I find moving averages only as relevant as the market wants to respect. It's very algo driven. So this is the weekly. This is the moving average calculated off the last 50 weeks and the last 200 weeks. What I like about this level is the 50-week moving average is right around that 30-30, which is on top of the 200-day. That's why you staged a little bit of a rally today, which ultimately failed. Looking at that 200-week, you can see it's amazing how well that is held. And unfortunately, if we don't hold this cluster, your next downside level is at about 26.20. And again, that's just the markets tracing this out and showing us where support is. So if we don't hold, that would be the next level of support. Now, I did see some promising signs with sort of that melt into the close here. A lot of the internals didn't confirm. This is very technical, but tick, trend, advanced decline. All these didn't confirm with new low readings as the S&Ps closed at the low. Further, let's go back to the end of 2018 and 19. This is the VIX in orange. All we did was go back and retest this 35 VIX level, which the higher the volatility, the more fear there is. Yet this was on the back of a 20% decline in the S&P, where we've only seen, as I said, about a 12%. So I think the market's gotten very fearful. And again, the internals that we're following aren't really confirming just this last push down. So I am not throwing in the towel yet. I'm still hopeful.
All right, Todd Gordon, still hopeful. Todd, come and join us. Grasso, what do you think of those levels?
Yeah, so I like his levels. He's probably a little more optimistic than I am ultimately on where we actually bottom out in this. So when you look at, I like following retracement levels. So when you look back to that 2350 level and the all-time high, you come up with the 618 retracement. Getting wonky here, it's right where we closed today.
Yep.
I don't think we bottomed today. I think we have another 100 handles lower in the S&P, and I think we have a possibility of rallying next week. But
next week?
Well, next week, because I think you have to let the whole news cycle filter through with all the Sunday morning shows. If there's going to be more cases and what the cases are, there's not going to be a lot of positive news flow this weekend. There just isn't.
Lori, we had a presidential press conference last night, very long ranging, about an hour long during our special. And Trump said we're going to be fine. There's not much going on. We've got the response. And what happened today? 1,100-point drop for the Dow.
No, and I think we also, it seemed like this morning when the market was really fighting back, trying to find that bottom, trying to put it in, the news flow was a little bit more favorable. I know that my email was blowing up in the afternoon when things were getting weaker, just with, various reports of things in California and the West Coast. And it just seemed like the news flow wasn't cooperating. And I think at the end of the day, there's a question of faith, faith in the government's ability to fight this thing. And that's not a political statement. I think that would be true of anybody that's in office right now. But just, that lack of certainty about how this virus actually functions, I think resurfaced in a big way in terms of people's minds today.
Yeah, I wanted to ask Todd, about the charts there. When you think about 2018, we had an early run up in the beginning of the year, and then we kind of flushed 10% or so, and it took a long time. It wasn't until October until we got back to the new highs,
right.
But then we flushed again 20%. Are we setting up for possibly a similar year when you think that there's a lot of unknowns here and the likelihood of new highs anytime soon? What do you think the chances of new highs are?
I think they're probable. I mean, I just think this is such a negative sentiment. Some of the largest hedge fund managers in the world were outright bearish, if not short, over the last 2 years, and now they just flipped. So I just think there's a lot to catch up here on the upside, unwinding this bearish sentiment that's been driving the market. So we were just technically range bound, right? So this is just a pullback. We've got a half back, which is very expected from a move.
It's the fastest 10% down move in the history of the American stock market.
But also they didn't let anybody in on the way out of that 2-year range. We only saw a 2.5% and a 3.5% correction post October 2019 break from that high. So, I think it was easy come, easy go. And I think there will be people, once we stabilize a little bit, who missed out on this entry, who are looking to get on the bid.
Yeah, and look, it was an 18% move from October to those highs. So
in tech was like 30%.
Yeah, and I'm not going to tell you that that's the most ferocious upside move we've seen in markets, but that was right there. It really was after a year where we'd also had a couple of those moves. And in fact, if you take the low off of deck 24, 2018 to that high, we effectively moved almost 44% on the S&P. I mean, that's, and again, I'm picking, the high and the low, but that's pretty extraordinary. When I think about what the market's done over those last, and Brian, you're emphasizing the very clear here, which is important. This reminds me of December 11th, the first 8 days of August of December 2011. What happened, I'll remind you, was when the U.S. lost its AAA. And again, we had this moment where no one really knew what it meant. It certainly didn't have immediate economic impact, and it really didn't even have a credit follow-through. But it had a case where you had enormous uncertainty around the world. And again, it was a slightly different time for sovereign bonds. It was really before Draghi had asserted himself and the ECB had begun to actually have some autonomy to do what it needed to be done. This is what this reminds me of in terms of the irrationality of the markets. And if you'll remember, we actually had a pretty ferocious rally as we got back up into September. There was a lot of folks that were worried about year-end stuff and missing out. But ultimately, it set us up for a very dangerous October.
But
and I think that's the allegory.
Here's the question that I have for Todd, though.
Yeah.
Todd, I know I go by a 3-day rule. So and sometimes I don't adhere to it myself, and I always regret it that I don't. The 3-day rule is wherever the stock bottoms or wherever the market bottoms, you wait 3 days and see if that bottom holds. On the third day, you're okay to dip your toe in. And I'm okay missing a couple of days of upside shot. How do you know, for people sitting at home, when you could start buying a market, when it starts finding a base, that it's a real base, in your opinion?
So I think you don't want to put the seatbelt on as the plane is just about to crash, right? You need to be prepared. You need to have your list. I've switched. I now work for a wealth management firm. We have a list of stocks that we want. This needs to be part of your plan. You need to be well planned out in order to have these names and start moving. You can't know when the bottom is. You absolutely can't know. But I just feel like you need to be properly allocated stocks that you like. There is no hard and fast way. I just think, you look at the technology. I'm shocked how much sentiment has shifted. We had a tech-led, semi-led rally just a month ago. People were talking about the new age of quantum computing, artificial intelligence, driverless cars, and all of a sudden we're throwing that all out because of a virus. I'm saying, well, let's kind of back up here a little. Let's calm ourselves here a little bit.